The market hits a record high following RBI's highest ever dividend for the government. The sensex and Nifty, along with the mid-cap indices, end at record closing levels. Mid-caps underperform. The market breadth remains in favor of declines.
Buying in financial names helped the Nifty Bank get more than 2%. RBI dividend bonanza leads to a sharp short covering in banks. Healthcare lags as Pharma guides for single-digit growth in FY25, while Lupin slides on new competition in one of their key drugs.
ITC reports a good set of numbers for the quarter gone by. The core business did well, while agri and paper businesses lag. On the other hand, Page Industries reports a sequentially weak quarter.
Hello and welcome. Bull charge ahead. Your go-to show. We're going to get you all the key data points of this today big rally that we saw and also gear you up for tomorrow's session. I'm Mayuresh, and joining me as always, Surabhi Upadhyay. Well, Surabhi, what a day.
Those bulls are charging ahead. They're saying we're ready for the 4th of June.
Yeah.
But indeed, I mean, a mega move, almost 400 points on the Nifty. So yesterday it was the RBI doing the bazooka.
Yeah.
Today it was the bulls of the equity market doing the bazooka, right?
Well, let's take stock actually of today's trading session. There were actually two big triggers. One was the big RBI dividend that we saw yesterday, which clearly helped sentiment here, both on the, on the fiscal mat, as well as it gives the government more amount of headroom in case they want to push through growth or expenditure. So that was one factor. Big dividend is what we saw, and crude cooling off. Remember a few sessions ago, we were at around $90 per barrel. We've cooled down to around $81 per barrel, which from an Indian perspective, it's very, very good. The Nifty Bank, yesterday it looked a little bit weak. It made a bit of a recovery in the second half of trade on the final hour of trade. It took out the 50 DMA, it took out the 20 DMA. It was on its way to around 49,000 odd, and that was the big driver in today's trading session, taking out some crucial technical levels. And one pillar of the market fired, which is the Nifty Bank, but he wanted the other one as well to do well. Nvidia's numbers came out overnight. Well, the stock was up close to around 6% in post-market close. It gave some kind of positive sentiment for the IT stocks, and they as well did see a big move. So you had both the opening batsmen, the banks and the IT names that did pretty well in trade today. And domestic-facing themes would be, what a beautiful rally out there. Large cap names. If you're talking about an L&T, that did the heavy lifting out there. You talk about some of these auto-related names, whether it was Mahindra & Mahindra, Eicher Motors, all of them moved up. The only problem was your portfolio may not be looking very, very good if in case you tilted more towards the broader markets, because the mid-caps did underperform in today's trading session. Advanced decline ratio, the index on the whole, underperformed in comparison to the large cap names.
Absolutely. I think the RBI provided the much needed trigger for banks to start playing catch up, and that sparked a massive move throughout the market as well. And that's exactly what we got today. Today there was support from a lot of different sectors, as Nigel also pointed out. It was banks on one side, it was auto stocks, IT was doing well, big names like Reliance were contributing. There weren't too many losers on Nifty. It was a very beautiful, widespread, broad move on the large cap screen itself. By the way, in the mid cap arena, yes, there was underperformance, but one trend that you can't ignore simply is PSUs. And today's PSU favorites were actually shipbuilding stocks. Many of them were looking at double-digit gains. I mean, stocks like Garden Reach Shipbuilders, almost 19% higher. Masga Dock, Cochin Shipyard, massive moves coming in on many of these PSU names. The performance in mid-caps was more stock-specific. It was a lot more about earnings reactions than a wider market move. So, for instance, Nykaa, disappointment on Q4 earnings. Gland, where the market thinks perhaps the worst is sort of, getting over and done for the company. Torrent Power, similar story there. Q4 P&L, market not too happy, but then the commentary and the outlook is what I think the market was focusing on. So recovery from the opening lows on that stock as well. So very interesting trends in the mid-cap market, but the headline absolutely coming in from that mega move on the Nifty and on the Sensex. Well, let's tell you about the lineup, what we have in store for you on the show today. We'll start off by getting you a little more color, and the color is largely green on all the movers and shakers. So Vivek joins in just a bit. The sector of the day was, of course, banks. The stocks that we'll focus on today are Lupin, Cipla and Sun Pharma. We'll tell you why these stocks were buzzing and what the news points here are. Then, of course, we come to D Street Chatter, find out what Nimesh picked up as this mega bull charge was playing out throughout the course of the day. And also today, he's looking at Adani Group stocks, particularly Adani Enterprises. Big move on many of these stocks, with Adani Enterprises leading from the front. And finally, of course, we'll look at all the key events that you need to watch out for tomorrow. But first, the movers and shakers. It's over to Vivek for that. Vivek.
Well, thank you so much. A complete green screen, and absolutely not complaining, very, very good day. So the first sector today that we will target is the one that underperformed so far. The entire banking pack, the entire space did very well today. So top movers, Access, Indus, and AU, all of them did quite well. All of them have been significant underperformers, especially in the last 2 weeks. The next set of stocks that did very well in the session today, especially in the last hour, saw significant up move, was the entire auto pack. So have a look at, the kind of moves that Maruti, Hero, TVS Motors, Eicher Motors, all of these names saw, especially in the last hour, very, very good session. You also alluded to the shipbuilders name. Both shipbuilders as well as railway stocks today did very, very well. Have a look at names like Garden Reach, Cochin Shipyard has got a very good set of results as well. And along with that, you also saw RBNL and IRFC today moving strong in the session. The next stock on the radar was PNB Housing. The company held an analyst meet, and analysts came back quite enthused. The company has given some strong commentary in terms of the guidance. A 17% loan book growth CAGR is what they're estimating between FY24 to FY27. The next stock on the radar was Gland Pharma. As far as the result itself was concerned, it was a muted set of results, but the core base business, especially as well as the US launch momentum, was something that was strong. Stock high by almost 5%, cooled off a little bit from the day's high. But on the other hand, there were a few set of stocks that did see some selling pressure. In fact, the entire commodity pack saw a bit of profit booking. So names like Hinzink, Vedanta, NMDC, Hindustan Copper, all of them cooled off a little bit in the session today. The next stock is Sun Pharma. Sun Pharma, slightly muted set of results, very high R&D spends that the company is anticipating, has made analysts quite wary as far as how FY25 will pan out, expecting a better FY26. Lupin, this particular stock, we highlighted it in the morning as well. One of the competitors for the company has got a nod for a very key drug, and on the back of that, stock saw almost a 5% sell-off today. HEG, again, a muted set of results. Along with that, Street hasn't taken too kindly to the kind of demerger that's happening over there. 16% lower for the session. And Team Lease, yesterday Team Lease was one of the top gainers just after the results came, but the internals look quite muted. Commentary too was quite muted, and stock ended lower by almost 10%.
Good wrap, Vivek. Thanks a lot for that. Well, it was a day of record rally for the markets. The Nifty ended just shy of the 23,000 mark. Buying in financial names led the sensex, the Nifty, to record highs. The mid-caps were the relative underperformers, though the index also scaled new highs. 44 out of the 50 Nifty stocks, well, they closed higher. The key contributors were the big boys: HDFC Bank, Reliance, and ICICI Bank. Let's listen in to some market opinion that we got all through the day.
If the results are, what the market likes, then yes, you could have a big relief rally, so to speak. I think after a few days, it will be back to kind of normal, right? And then there will be the anticipation for the budget in terms of what happens. Well, there will be anticipation because, they've talked about bold reforms. So people are, everybody is going to think, from my perspective, we will think about capital markets, what can come. Somebody else will think, what can come as a bold reform in the budget. But it'll be interesting to see. I think on the whole, in the run-up, if the results are as per the market's liking, then I think in the run-up to the budget, we should have a pretty decent market, I would say.
Continuity means there is no break of the policies. If anything, whatever policies were pursued, it will be pursued with a lot more vigor. Say, Vande Mataram train, if they have done, say, 200 or 300, they may do in thousands. So like that, much more bigger ambitious things will be rolled out. And it also depends on how the economy responds.
Okay, well, that was market opinion that we picked up on this big day. Joining in, now we have with us Mayuresh Joshi, Head of Equity Research at William O'Neill, as well as Ruchit Jain, Lead for Research at 5paisa.com. Mayuresh and Ruchit, thank you very much for joining in. So, Ruchit, just, on levels now that we're in blue sky territory, how do you read the strength of the breakout that we've seen today? Nifty Bank is still about 2.5% away from all-time highs. Would you be comfortable taking fresh longs now?
Yeah, hi, very good afternoon, Subhi. Very good afternoon, Nigel. Well, there's no doubt about the broader trend which remains on the positive side. And usually whenever market hits all-time high, in technical analysis, we take retracements of the previous correction to take a gauge that where the next resistance could be. And the recent correction which we saw from 22,800 to 21,820, almost a 1,000-point correction, 138.2% retracement of that correction is coming around 23,170, and 161.8% retracement is coming around 22,400. So we believe that from a very short-term perspective, our markets could continue with this move towards 23,400 kind of levels. So the risk-reward ratio, even after today's up move, is not that bad to create fresh longs. So one can take a fresh exposure since the rally has been supported by large cap stocks today, and one can keep a stop loss below 22,750 now, which is a support on the lower time frame charts. In fact, if you look at next series options data, being a monthly expiry, today we witnessed a lot of put writing over there in 22,800 strike price. So 22,750 should be the stop loss on any long positions, existing longs or even fresh longs. And one can expect first targets around 23,160, followed by short-term targets around 22,400. Sorry, 23,400.
Okay, all right. Got that. Well, let's focus on the sector of the day then. That's the banks. The Nifty Bank index gained over 2%. This after the RBI announced a record annual dividend of 2.11 lakh crore rupees for the government. This is a bonanza for the government, which had budgeted just over 1 lakh crores, and the payout is double of that amount. Well, this dividend is nearly 3 times higher than the 87,000 crore payout that we saw in the previous fiscal, that's FY23. We spoke to a whole host of guests. Mr. Samran Chakrabarti, the Chief Economist for India at Citi, as well as Sonal Verma, the MD and Chief Economist at India at Nomura Financial Advisory. Here's what they make of this big move.
We were putting out in our notes saying that there is a possibility that the RBI dividend will be significantly higher than what the government has budgeted for. And so that way, it's not that big a surprise for us. Yes, it means that the government has 3 options in some sense. One is that it can reduce the fiscal deficit, 0.3% of GDP, as you mentioned. What the initial thought process was that the government will do only somewhat marginal tweak to the interim budget numbers, because the interim budget itself was quite detailed. Now, with this more than 1 lakh crore extra kitty, the budget maths will have to be reworked, and it will become very interesting, and the market will keep on speculating till it's actually announced.
It's a substantial fiscal bonanza that has come in. We think the government could therefore choose to reduce the deficit marginally when it presents the final budget in early July, which is what we're expecting, but also leave some cushion for any unexpected shifts that might happen on the revenue and the expenditure side. This is actually going to add to the cash surplus that the government is sitting on. This could very well go, above 5 trillion INR, and therefore some sort of a reduction in the borrowing, could happen. Again, the details of this are likely to get announced in the budget. And as Somiran was saying, it's really positive from a demand-supply environment. So our own forecast is that the 7-year as well as the 10-year bond yields could drop to 6.75%.
Okay, so there you hear views coming in on what this RBI bonanza perhaps could mean for the fiscal deficit, for the bond markets, and overall borrowing expectations. Mayuresh, we saw what that did to bank stocks. It just sparked a massive fire, massive rally really over there. But how would you approach BFSI? What would you buy afresh, given that stocks have now reached elevated levels?
Afternoon, Surabhi. Obviously there are a lot of triggers behind the entire space as a whole. And second, I think earnings for a large part of this space has held up pretty well. So I think expectations in terms of NIM contraction has been very, very marginal. What has largely transpired, specifically for the large private sector banks, was how deposits will probably grow. But even they have grown at a reasonable pace in the quarter gone by. And with some elements of expectations that there will be at least a rate cut in the US market or two, RBI should also have a similar trajectory in the Indian context, which also gives similar tailwinds in terms of significant growth levers that the space can probably have. So I think among the large names, the PSRS ratings for stocks like an ICICI Bank, Axis Bank look extremely strong. Within the PSU universe, stocks like State Bank of India, Bank of Baroda are also exhibiting similar characteristics and most parameters in terms of growth, specifically when it comes to advances growth, NI growth, the provisioning that they've done, credit costs expected to trend lower, are all positive signs in terms of return ratios picking up, which we closely monitor at MSI. So I think all these 3-4 large names can definitely be kept on your watch list.
Okay, all right. Got that, Mayuresh. Well, let's focus on the pharma themes. Ekta joins us to tell us why a couple of those stocks did get knocked back in today's session. Ekta, take it away.
Well, yes, Lupin and Cipla were in focus today. That is because Amphastar has received US FDA approval for a particular drug that they sell in the US markets, which is basically albuterol inhaler. So Amphastar has received US FDA approval for this particular drug. Now, it is a negative read-through for Lupin as well as Cipla, because albuterol is the second largest revenue contributor to Lupin and Cipla's US revenues. And estimates are, according to analysts, that there could be some amount of price aggression from Amphastar. They could probably resort to around 10 to 25% price erosion to gain market share. So that's the reason why you saw these stocks under pressure. But remember that this is not the first time that a big product has seen competition come in. Yes, it does dent sentiment, but this is pretty much factored into the larger business models, and hence maybe the street will probably shrug it off at some point.
Okay, all right, got that. Thanks very much, Ekta, for those details. Well, staying with the pharma space, Sun Pharma was the top Nifty loser today after the company's revenue came in below estimates. However, margins came in better than expected. Group CFO CS Muralidharan spoke to CNBC TV 18 about the company's guidance for the current fiscal.
So our revenue guidance of high single-digit growth of FY25 is based on all the businesses which are poised for growth. As far as the EBITDA margin guidance, we have not been given guidance on EBITDA for last couple of years at this point of time.
All right, so you had both the pillars of the market that did do well, that was tech as well as the banking names. But it required some support coming from a big boy like ITC, and the numbers did disappoint. Mangalam joins us to fill us in with a quick analysis on that. Mangalam.
Well, ITC was higher in today's trading session as the company reported their fourth quarter numbers, and it looks like, even as the headline numbers were below expectations, the internals were pretty strong. Starting from the estimated cigarette volume growth as well, which came in at around 2 to 3%, and this compares with street expectations of 0 to 1%. So let's tell you what's good and what's not so good in these numbers. What's good was the cigarettes revenue for the company grew by 7.7% as against street expectations of 4 to 5%. FMCG revenue for the company also grew at 7%, slightly lower end of street's expected range of 7 to 9%, but nothing really to worry about. In fact, the margins for the FMCG business did improve quarter on quarter. That's not all. The hotel business, which has been on a strong footing for the entire industry, continues to do well for ITC as well. The revenues grew 15% with an EBIT growth of 33%. Now let's talk about the weaker parts of the company. Agriculture, there we saw a near 13% decline in revenues. This as against street expectations of 5 to 6% growth. Even the paper business saw a revenue decline of nearly 7% as against expectations of 5 to 10% decline. The street was working with weakness in the paper business and some one-offs in the agri business itself. And that led to the overall numbers, reported numbers, being slightly below street expectations, 16,579 crores on the top line versus a poll of nearly 17,000 crores. EBITDA about 150 crores shy of street expectations of 6,300 crores. Margins were largely in line, and the net profit came in a little above 5,000 crores as against street expectations of 5,115 crores. The key triggers to watch out for going forward will be one, the hotel demerger shareholder nod that takes place on June 6th, and thereafter the budget announcement of the new government is something we'll be watching out for in terms of taxes for the tobacco industry, and rural recovery has been a theme for all the FMCG companies, and ITC going forward should benefit from that.
All right, Mangalam, thank you very much for that. And with that, it is time for a quick break. We'll come back on the other side and get you a popular segment, D Street Chatter, along with all the events to watch out for tomorrow.
Welcome back. Well, let's shift focus to the corporate corner segment. First up, Bharat Electronics. The management has guided for 25,000 crore rupees worth of order inflow for FY25, but says that this does not include some big ticket orders. They add that the order value will be in the range of around 2 to around 3,000 crore rupees, and the contract with L&T will be executed in the next 2 to 3 years. Next on the list is PG Electroplast. That reported a strong set of numbers. The management is aiming for 3,400 crores of revenues, with margin expanding by around 100 basis points for FY25, and the growth will be led by the AC segment and washing machine segment.
Now on to TeamLease. The human resources services company does not see any recovery in IT hiring or specialized staffing going ahead. The management says it's comfortable with 20% growth in generalized staffing. The company anticipates improvement of 5 to 10 basis points in margins on a sequential basis. That's not all. HEG was under tremendous pressure today as margins came in at a 3-year low. Also, the company announced a demerger of the business. The management says that HEG Green Tech EBITDA will move towards 1,000 crore rupees in the next 2 to 3 years, while the core business will struggle for 2 more quarters. Okay, well, those were some of the important corporate highlights that we picked up during the course of the day. It is now time for D Street Chatter. Let's straight away go to Nimesh and figure out all that he picked up on today's mega bull charge. Nimesh.
Hi, Sarvina. Record high for the markets thanks to some massive short covering in the financial limbs today. However, the breadth was weak and the mid-cap index relatively underperformed. So it's not like every trader made money in this big charge today. In terms of individual stocks, so the first name is Adani Enterprise. Big move on that stock, was the biggest F&O gainer today on large volumes as well. The seed is anticipating Adani Enterprise to replace Wipro in the sensex later this week. So that was a big trigger for the stock to do well today. The second stock is Vedanta. While the stock was under pressure today, so with the metal names, but for the last couple of days, there is very strong buying interest from larger FIs. So again, in today's trade, there was delivery-based buying from larger FIs in Vedanta. The third stock is BEL. A big move in that stock as well, post earnings, and very strong commentary from the management. But after such a sharp move, some bit of profit booking is clearly visible. So there were sell flows from larger FIs in BEL today at higher levels. And the last name is Engineers India. Again, this was one stock which was buzzing into it on large volumes. I understand some HNI interest is back, and some large HNI investors have been active buyers as well in Engineers India in the last couple of days.
All right, Nimesh, thanks a lot for that. Well, before we wind down on the show, let's get in Abhishek to tell us all the key market events we need to track for tomorrow. Abhishek.
Well, to begin with, US jobless claims data will come out today. The estimation is about 2.22 lakh versus 2.2 lakh last time that it had come out. S&P Global PMI, that is estimated to come at 51.3%. And to watch out for tomorrow, RBI data will be there on Forex reserves. There will be bonus issues from GM Breweries 1:4. Inox wins the announcement again on bonus issue of 3:1. Stock split will take place. Bharat Dynamics face value will decline to rupees 5 from rupees 10, and Som Distilleries over there, the face value will decline from rupees 5 to rupees 2. Interim or final dividends will be coming out for Vedanta Limited as well as Tata Consumer Products. And watch out for the earning season. Tomorrow we have results coming in from Ashok Leyland, Hindustan Construction Company, Hindalco, as well as Hindustan Copper Limited, and it will mark the end of result season for the banking sector with Karnataka Bank result, Manappuram Finance Limited, and United Spirits as well.
Okay, Abhishek, thanks a lot for that. Well, with that, it's a wrap on this edition of Bull Charge Ahead. We'll be back with more news and updates on the other side.